All righty. Well, good afternoon, everybody. My name is James Nemeth. I am head of marketing for Laveniir. And so I wanted to thank everybody for taking their time out of their day today as we are going to go ahead and step into our virtual tax workshop. That's really exciting, especially in today, how we have everything going on. So without further ado, we're going to hold all of our questions till the end, but please feel free to go ahead and hit the chat feature for later, and we'll go ahead and answer your questions at that moment in time. And so let's go ahead and get started, shall we? How are we doing today, guests?
Doing great.
Awesome.
Doing
Very
good.
great.
Perfect. Alrighty, so let's go ahead and get started, shall we? Alrighty. So first of all, I want to go ahead and introduce Miss Ursula Martin. She will go ahead and talk about Laveniir. Ursula is the owner of Laveniir Incorporated. And so without further ado, Ursula, I'll let you go ahead and take over.
Thank you, James, and greetings, everyone. And first of all, Happy New Year. Thank you for joining the webinar, the task workshop. My name is Ursula Martin, like he already said. I am also the senior consultant at Laveniir. And for the background, I have offered tax services under Martin Business Consulting for about 12 years now. And with all the changes that we have experienced last year, it required that we create a better system or agency that actually capture the need of the client with all the changes that has happened last year. So, which is why we have created Laveniir Incorporation to better serve our client and a new client as well. So it's an honor and privilege to have you here today. And without wasting much time, we will just get right into the topic of today. First of all, the reason why we have actually decided to offer this workshop, this tax workshop, is because the tax return that we actually prepare has actually gone through a lot of changes, and also because your tax document is a very important document, is a document that actually requires time and planning, and is a document that is also requested every time you need to actually purchase a house, make a very important financial purchase. Your tax return is always required, to qualify you for one thing or the other. So we thought that it was necessary to organize such a workshop and talked about your taxes and how you need to actually plan toward your tax return. So why choose Laveniir? Because we have several tax preparation agencies across, and you have to know why you actually choosing one tax preparation agency over the other one. Laveniir is simply a nationwide federal state tax preparation and community tax preparation agency that believes in educating the community and contribute to the community financial health. And what is very important to us at Laveniir is that we understand how important your tax return is. So we offer year-round assistance before, during, and after tax season. Our professional give insight into the best practice for you to document income and expenses for accurate tax return purpose. We are experienced and qualified to prepare your federal, state, individual, and business tax return. Additional to the 10 years experience, we actually provide tax education. We provide solution and winning strategies, and we prep clients for the next tax season. Above all, we aim to build a financially healthy community. Now, to 2020 is important to talk about the changes that we already all know. We have gone through a lot, COVID, new president, and so on. And because tax preparation, when you prepare a tax return, is always the reflection of your income of the previous year. Is always you are in 2020 or 2021. 2021 will reflect all your income of 2020. So is the right time to talk about those changes and how it affects or impacts. So we will actually have some strong topic such as the W-4, and then the advantage and the importance of owning a business. And we will actually choose an example of a business, which is a real estate business. So we have also created a very safe virtual platform to allow us to continue to prepare our client tax return with 100% accurate calculation. But the best way to be safe this day is through a virtual mean and use technology to still have that connection with the client if we can do the usual physical meeting that we used to under the circumstances. So without wasting much time, we will actually get to the topic. Like I said already, is going to be your W-4 and the importance of owning a business. Why your W-4, you will hear much more about why in a minute as soon as I'm done here. Your W-4 is very important. That's where, as an employee, that's where you get started for everything, your withholding and everything. So you have to understand that. And then why owning a business is important to also hear that it has some advantages that can help you on your tax return. But like I said, you just have to be patient and hear more about it. So thank you very much. To conclude, I will just urge every one of you, invite you to visit us at laveniir.com, and just so to see the other services that we provide, such as business services, and also a free QuickBook bookkeeping for all self-employed that sign up with Laveniir. So we do that in order to provide you all the protection and the defense that you need in case of an audit, because a QuickBook reporting provides you everything and that support your deduction. And the IRS that's what the IRS would like to see. So in other way, Laveniir is here to do what is right by you. Thank you very much.
Thank you very much, Ursula. And that's the biggest thing is as we're coming out of 2020, there's been a lot of changes and we've had to be a lot more fluid and a lot more versatile. And I definitely see that, having you and Laveniir, every step of the way kind of really does help navigate those waters that we may have not ever seen before. And that's a big thing as always. And so let's go ahead and kind of move on to our introduction of our next panelists and guests. Our guest speakers are Dr. Ed Whittle and Andre Aris. And so they actually are the authors of Turn Debt into Dollars. And it essentially is Turn Everyday Expenses into Monthly Income. When I actually saw the title of this book, I actually thought, so Dr. Ed and Andre, what exactly does this mean? And can you guys, kind of give us some insight as to what's going on with this?
You want to take that, sir?
Sure. Hi, I'm Pastor Andre Aris, Apostle Andre Aris. My good friend, Dr. Ed Whittle, and I have put this book together. We've been working together as a team for the last 30 years in tax preparation and tax strategies. And the number one thing that we found out is that most Americans, especially if you make about $80,000 and below, you're going to have some financial struggles. That's whether there's a COVID or there is no COVID, there's going to be financial struggles. So we've come up with a way to show people that you have the money to do the things necessary to improve your financial situation. You just don't have a technique. You don't have a strategy. So we came up with this book to express some strategies that we have put together, some very simple things. But I will tell you that the hardest thing or the most important thing that we have found that people do not do in finding out about our system is they just don't follow through. They just don't do what they're supposed to do. But for those who do, we have way more good stories than we have with those who have not. And so, you know, as it is, people come to us every year, say, hey, I didn't do what I was supposed to do, but can you still help me out? So that's what we run. That's what we run into taxes. But yes, there are ways that your debts, your phone bill, your electric bill, your travels that you go to, you may not be in business, but you still do these things. You still go out to eat. You still have a cell phone. Okay, so you're still doing all these things, but every time you pay that bill is not coming, that money that you're spending is not coming back to you in any means. You've basically created a debt or a loss. But with our system, we show you that you pay these same bills, but the money comes back to you in the form of what they call tax deductions. Tax deductions then become what is called income towards your tax refund, meaning that if you're getting a certain refund, it'll get bigger, or it means that if you're paying taxes, you'll be paying a whole lot less. So that's the basics of what the book is all about. Dr. Whittaker, do you want to add to that?
Yeah. And that's the thing. If you're going to, you know, everyone has debts, right? Everyone has expenses. The key is if we're going to convert them into tax deductions so that you pay less taxes and you get more in your pocket, we have to be able to justify that. So that's what the speakers are referring to, is having a viable side business. You know, and one of the businesses that has been most productive for us has been real estate. And a little bit about myself, you know, I'm a real estate investor in the Tampa Bay area, located up in Brooksville, Florida. And my resume includes 25 years as a college business law professor. I originally formed a tax consulting business in 1990 called Tax Breaks. This is how my business partner and I met. And he took the bull by the horns with that company and, you know, took it to a whole nother level, because we were making the transition from doing taxes by hand, if you can remember that, writing with pencils on a piece of paper and mailing in tax returns, to actually e-filing returns. And I didn't want nothing to do with the e-filing. So he took that on and learned how to do that transition. At the same time, you know, we were collaborating. I was getting into real estate, and I was thinking, wow, this is a great way to show people how to use the tax shift, the money that was going into taxes that was now going to be put back into their pockets, to get into real estate investing. So I started a real estate company called Peakland Investors in 2006. So that's been about 15 years ago. We dedicated that company to helping individuals and families to own real estate through rent to own terms. And we've had great success in that. I think we've had over 500 clients that have actually become tax clients over the years, but we've had over 100 of those clients that became homeowners, either where they occupied the home or they invested in the home. And we'll talk a little bit more later about the difference between an occupant investor and a non-occupant investor. So along the way, you know, we authored the book, Turning Debts to Dollars. I authored a book before that because as a college professor, most of my students were non-traditional students, meaning they were working full-time and going to school full-time. So I authored a book called Disown Your Student Loan. and basically showed them how after they got out of college and they started working, they could use the tax shift. They could use that money that was going back in their pocket rather than going to the IRS's pocket to pay off their student loan. So in effect, they would be getting their loan paid off and be getting a discounted or a free college education. Lastly, I wrote a book called Thanks But No Banks about how to own a bank. How to own a bank, how to own a home without having to go through the bank. Because a lot of times the bank says no. And so what do? Do we just give up on real estate when the bank says no? No, there's other ways to own real estate. So lastly, our current project that we're working on is True Freedom University. And I think, James, I think you've got a clip on that.
Yeah, we do.
Show the viewers.
You're right. Let's go ahead and show that, shall we? All righty. And here we go. So what is True Freedom University?
True Freedom University, TFU. A tale of two taxpayers. Rich and Paul are both age 40 and work at the same place and both make $40,000 a year. Rich sacrifices 4 hours a week to attend TFU's online and on-phone classes. Rich gets free tuition and actually receives $4,000 a year for attending. Paul pays $8,000 in taxes, but Rich only pays $4,000 because of TFU. TFU helps Rich invest the $4,000 he saves in taxes into real estate. At 67, Paul has to keep working because his Social Security check doesn't cover his bills. At 55, Rich retires because he owns 10 investment homes and earns $5,000 a month for life from his real estate investments. Rich is really glad he attended TFU.
Well, that's really exciting because it's
True.
There we go. Sorry about that. So that's one of those things where technology always comes into play, especially now with Surprise 2021. But that's really interesting that you brought that in because, looking forward and into that insight about, the future of how what you do today impacts tomorrow. And that's a big component. And, I thank you, Dr. Ed and Andre, for, kind of starting that dialogue discussion that says, hey, these are the things that we kind of have to be mindful of, and there is a solution to those specific problems. However, you just simply have to ask the right questions, and you have to know who to ask those questions to. Alrighty, so we're going to go ahead and shift over now to Ursula. We're going to talk some case studies and questions. You ready to go?
Ready?
Alrighty, so here we go. So case study number 1. A single mother of 3 has to work from home for 8 months due to COVID and has incurred an increase in expenses. How does she get her tax return accurately done?
Okay. The approach here is very important for the tax preparer to determine if the single mother, if the taxpayer is a renter, is renting a home, or she's a homeowner, and also need to determine if she is an employee, self-employed, or she's both. Because in the first case, as an employee, if she is actually renting or she is a homeowner, she's gonna have the option to itemize deduction. If she's self-employed, she is going to have the option to deduct the business expenses with all that. Or if she's both, no itemized deduction is still needed. In this case, she would just have to focus on business deduction only. It will be the best outcome for her. However, every case is different. That is why we actually go case by case. We tailored a very customized approach for every client. So that's the best way to approach, her tax preparation in this case, for this case study.
Yeah, and that's a really good thing that you brought up because, and this is the big key thing with Laveniir, is the fact that not everybody is going to have the exact same way that their taxes should be prepared. In fact, there is an actual specific way where you will kind of customize and look based on that specific needs of that specific person. And that's how you build their strategy of how to prepare their taxes. So that's a really good thing. So, okay, let's go to case study number 2.
I want to add something to that.
Sure.
Yeah, I want to add to that, that Laveniir, is not like all the other companies out there, because for the very point that you just brought out, a lot of these companies have a cookie cutting system in place. They're not client oriented, they're numbers oriented. So everyone's approach is the same approach. And that's not what they do at Laveniir. And that's what's going to separate, or that does separate Laveniir from everyone else. It doesn't matter, these big companies, the way they get you is the various services that they provide for you, which should be free services, but you actually have to pay for those services. So it makes the consumer think that because I'm paying more money for these services, I'm getting a better service, when in fact that's not true. Because of the focus on service and not the focus on the tax return, you're not necessarily getting the best tax return. Now, I'm saying this not because of speculation, it's because that's how we build our client base off of people, these companies who are just set in their ways of doing business. And so everybody doesn't fit in, and therefore they're not getting the best tax return. So they come to us and companies like Laveniir to get a better tax return. So they're focusing more on the quality of the tax return rather than the quantity in the tax return.
That's a very good point that you bring that up. In fact, one of my friends that I was talking to this past week, and actually this is our case study number 2, because it's very similar to when I was having a conversation with them, that, Ursula, as an independent contractor, how best would be the best way to prepare my tax to be qualified to buy a home? Because that is that next evolutionary step, especially in life, is that you really want to go ahead and purchase your home. So what would be the best way to do that?
Okay, this case study is a very interesting one because it actually allows me to point out two components of tax preparation. First is important. This question actually shows how important it is to invest time into developing a close relationship with your tax preparer. You have to think about and look at your tax preparer as an ally, right? Or like your lawyer is very important. So you have to willing to spend the time needed to understand, the direction or the strategy that your tax preparer is giving you. It's like a doctor diagnostic you with something and telling you exactly what you need to do to actually avert that or to receive some type of relief. And then the second reason why it's very interesting, this case study, is because it actually shows the responsibility that is on the taxpayers, because most of the time taxpayers, they just think that they receive the funds and I'm just coming to you during tax season and then expect the magic to happen. But well, there are cases where you understand that there is a planning that needs to be done prior. That is why we offer year-round tax season services, tax preparation service, It's very important. It's not every tax return case that will just require that you just bring your form and you just file your tax return. This will actually require a prior planning. So if I have a client in need to have the tax return prepared in order to be qualified to buy a home, there is a lot of prior step that unfortunately is not going to happen right away at the time that the client is coming to me. So the client will actually have to balance his deduction as a business person and his revenue in order to receive the end of a result, the total income that will qualify him as a purchaser of the house. So we don't know how much the house will cost. So it actually required a lot of balancing. And if you want to also find out which program are you getting yourself into if you want to buy that house, there's a lot of real estate program out there. Some program will require that if you go back 2 years or 3 years back, Some program will actually require just 1 year of your tax return in order to qualify you. But then what do you do? So it's important to understand here that you have to develop a close relationship with your tax preparer, and then you have to actually have the responsibility to do some planning ahead of time.
That is great. In fact, I'll I've notated some information there so that I can kind of pass it along to my friend. Thank you very much. All right, so let's move
You are
on to
welcome.
case study case study number 3. All right, my wife is a customer service supervisor for a major company here in Tampa and works 8 to 10 hours a day in a makeshift home office. How will my wife working from home affect my taxes since this is a result of COVID and she wasn't given an option? This was a mandate.
Okay, this question is, this case study is also very interesting. Okay, first thing first, it will not impact your taxes negatively, at least I can tell you that, because this is a case of, if you're talking about your wife, the case study, it means that we most likely talking about joint return. And then we also need to find out, like the first case, your spouse is a W person category, or and the wife also W2, which is like, strict employee. Or also find out if the spouse is business person and you the wife employee. So we need to determine all of that, and also to find out if is a case of 2 people renting, homeowner, and things like that. And then if we are in a situation where both are just like, employee, then we will actually have to push for itemized deduction. If it's a case of one person at least is a business owner, again, business again, right? Business owner, then it will actually be the case of deducting business expenses. So that's the best approach in this case. But the most important thing is to know that either it has been imposed or not, is just an avenue to actually push for the deduction of all those expenses that has been incurred for that particular reason.
Awesome. Thank you very much on that. That's some very good insights, especially because, nobody expected 2020 to have COVID have impacted their personal lives, and truly some people that have maybe done the 1040 EZ, well, that may not necessarily be the case this time around because,
Mhm.
now that they're working from home, there's some itemized deductions and stuff from there that they could certainly take advantage of. So that's a really good call out. Okay, so let's go ahead and move on to question number 1. So, in case that if somebody's filed, how do you file a correction on my tax return that's already been e-filed? Is that something that Laveniir can help with?
Oh, yes, absolutely. Is just a case of filing an amendment. And a good thing is, one of the changes that is a good change for 2020 is that the IRS has actually finally gotten the time to allow the amendment to be e-filed now. So we don't have to actually mail it or post it. So we can directly e-file it. So it's just the very simple way to do it.
Wow, that's great because truly I think there's a lot of stress and anxiety, especially when, you may have to do an amendment or a correction and not knowing that exact process. So having Laveniir in your corner is a really good big step. Okay,
And then the
so
good thing is we actually prepare, like, previous tax return, and also do amendment for even back to 3 years back previously. You can actually amend your 3 years tax return as well. So I just wanted to actually let that out.
wow, that's great. So now we're going to go ahead and transition over to Dr. Ed and Andre. Are you guys ready for this? I'm just kind of feeling that out.
Absolutely.
I know it's kind of tough. You have to try to follow up Ursula, and she had some really good knowledge there. All right, so let's go ahead and we're going to kick up here. All right, so question number 1, gentlemen. What is the maximum real estate amounts for tax deductions? Who wants to go first?
You want that one,
Go
Triple
ahead,
A?
Doc.
All right.
Go ahead, Doc.
So the maximum real estate amounts for tax deductions are $25,000. Now that's whether you have one investment house, 2 investment houses, 10 investment houses. you get a total of $25,000 in tax deductions. And of course, those tax deductions are born out of, your advertisement cost, your mortgage payments that you're paying on the house, your real estate taxes that you're paying on the house, your supplies, your professional maintenance organization if you're using one. So, and there's a whole number of deductions that come out of that. Now, one of our strategies that will give you a secret to is this real estate tax deduction is accomplished through what's called a Schedule E form. But we also can strategize a Schedule C form, which is a profit or loss from business. And that opens the door to additional tax write-offs that can exceed the $25,000, because now you're not only a real estate investor, you're also operating a business as a real estate investor. You want to elaborate on that, partner?
Oh yeah, absolutely. And this goes back to what we were saying earlier about people who make less than $80,000 a year, and why real estate is such an awesome deduction that you can use because of the amount of the deductions. One piece of property having $25,000 in deductions means that, for an example, if I was responsible rather for $50,000 in taxes, and now I'm deducting $25,000, now I'm only responsible for $25,000 in taxes. That is huge. And so the people who make more than $100,000, that's peanuts to them. But to those who make less than 80,000 and below, that is huge. And so it does better to invest in a real estate investment annually, because stocks does not work the same way as real estate. You don't deduct a lot of deductions in stocks like you do in real estate.
Right.
Your 401k doesn't allow that to happen. Your bank account savings doesn't allow that to happen. So real estate has so many values because it's not really just about the deductions either. It's also about actually working the business of being a real estate investor and all the various applications that can go with being a real estate investor and using the taxes to get it started. Everybody knows that you need money to make money, but there's no rule says you couldn't get it from your taxes. In fact, there are all kinds of rules that says, hey, here's a way that you can use your taxes. And we have all kinds of books. If the name Sandy Botkins rings a bell to anyone, that goes way back to the IRS a long time ago. Sandy Botkins is a guy, by the way, and he wrote a book about tax deduction. He was the IRS man. He was the man who wrote the rules about the IRS. And so he wrote a book about these tax deductions. So these are not speculations. These are just the necessity of changes that people need to grasp or to learn about so that they can know what they're doing with taxes. Because right now, taxes is just an annual event for a lot of people, something that they see once a year, and then that's the end of it. And they're not understanding that those taxes can be utilized to tremendously change their financial wealth and their financial situation.
That's some really good observations, especially, I didn't even realize that, if I had one property versus if I had 10, it's still the exact same deduction of 25,000. So that's some really good information. Okay, so now moving into question number 2. What happens when someone stops making a payment but tries to continue occupying the real estate?
Well, I'll start with that, and then you can add your input as well. One of the things that happens that that relates to taxes, and we actually have some clients that are in that situation, is that it slows down the ability for them to reach that maximum 25,000. You got to see that when you're using a write-off like a real estate write-off, and you're that's coming right off of your adjusted gross income. So if you're making $50,000 and you're maximizing your real estate write-off at 25,000, then you're only going to be taxed on 25,000. But if you're not making payments on your real estate, then it not only doesn't allow you to use a mortgage interest payment, but it also, as a write-off, it also cuts back on all those other deductions I mentioned earlier. So let's say you had the opportunity to take a $25,000 real estate loss, but you only were able to take $5,000 because you stopped making the payment on the real estate. Then you would have left on the table, so to speak, $20,000 that you could have used in a real estate write-off, which in some cases can even be more than what your payment that was stopped would have amounted to. In other words, you might have not made say $4,000 in real estate payments, but you left $8,000 on the table with a tax write-off. So that's why it's so important to have someone working in your corner as a tax professional that can advise you along these matters, because people just don't know about these things, so they leave money on the table every day. I mean, there's one saying, and I'll turn it over to my partner after saying this, but there's one saying they used to say about not having a side business. They'd say, you realize if you don't have a side business, every time you drive 5 miles in your car, you're throwing a $20 bill out the window. And people don't realize all the opportunities they have to shift that income from the pocket of the IRS into their pocket, just because they don't have the knowledge and they don't have somebody in their corner.
Well said, and I totally agree with how you laid that out. But I want to just put a little positive spin on this a little bit here. Because especially in the time of COVID, first thing that comes to everybody's mind is, well, I just don't have the money. It's not that I don't want to pay, I just simply don't have the finances to do this. This is why Dr. Woodle and I actually put the company together, because one of the things that happens when you are an investor with, I don't care what company it is, whether it's a stock company or whether it's an investment of some sort, if you stop making payments, you stop receiving your benefits. So that's just the golden rule. But with working with a company like Laveniir and our company, you have some leeways. With us, there's no such thing as a loss. We know that things happen. And Dr. Whittle is famous, and that's why we were able to help so many people, because things happen in life, especially when you don't make a lot of money. A small tragedy in someone's lives can just change the whole outcome of the household, because you don't have enough money to support the challenges that go with it. So with us, we're always finding a way to keep the ball rolling, keep the payments moving, but make necessary changes. Well, we have that leeway to do that. A lot of companies don't do that. A lot of companies will not continue to do business with you if you're simply not paying. But with our company, working with companies like Laveniir, we're able to continue to do that so that there is no loss. And it's tough when you're learning how to be a lender rather than a borrower. Should I say, when you're learning how to be an owner. When you become an owner, there's more responsibility that you have to have, and a good portion of that responsibility is money. So if you lack in money, you're gonna have to lack in having your ownership, your stand in ownership. So yes, when you're not making payments, yeah, you're sensing loss. But if you're working with a company that works with you, like Laveniir and companies like ourselves, then yes, we can help in situations like this, because loss is not a good thing when it comes down to investing when you making less than $80,000 a year, you know. But wisdom dictates that you should work with someone who's going to work with you. And that's what we do. That's what we specialize.
Awesome. That's great to know. Thanks, guys. On especially on that, that's a little difficult of a challenge there. And so let's kind of move into question number 3. And how can a buyer leverage their real estate investment to buy more homes?
All right. So, and let me say something about the previous question, just as an aside. And in the times we're in, the word occupy, right? You can occupy your job and work from home. You still occupy your job. So to occupy a home from a tax perspective doesn't necessarily mean that you move into the house. It
Right.
means that you occupy it, so you position yourself to get a tax write-off for it.
Great to
Simply
know.
stated, question 3, how can a buyer leverage their real estate investment to buy more homes? And this is my partner alluded to, how real estate can be better than stock investing and better than, other types of investments that are available. This is a great example, the answer to this question, because I say this to my wife all the time. The real estate investment is not going anywhere, right? It's a home on land, and it's not able to be picked up and taken to another location if we're talking about real estate that's not mobile. And so in this regard, I want you to think about if you have a real estate investment and you pay it down $10,000 and it goes up in value $10,000, then the spread between what you've reduced your payment or what your balance to, plus the spread, the spread plus the amount that it has appreciated, is $20,000 in that example. And so you can see that you can't really do that with stock. You can't do that with a lot of other investments, where at the same time you're reducing your obligation, you're realizing the appreciation. Now, yeah, real estate does go down from time to time, but notice how just in our lifetimes, every time real estate has dropped, it's been a major news event, right? There's not a lot of talk when real estate is doubling and tripling in value. You don't hear that in the news a lot. But just let the real estate slip by 5 or 10%, and it's all over the news, right? Because it doesn't happen that often. If you looked at all the history over all the years, I was looking at the house I lived in as a teenager. I found a little article of that house, a little advertisement, when my parents were getting ready to buy that house. And back in the 70s, that house was $32,000. And I looked it up on Zillow, and the house is $232,000 now.
Yeah.
And traditionally, that's what happens. So leveraging real estate investments to buy more homes becomes easier because you don't have to give up your previous home. You leverage that home, you keep that home, and then you add homes to that out of the proceeds of what you're receiving from your previous homes. Simply said.
Makes perfect sense. I like that all the way through. And so let's kind of move ahead into question 4. And aside from using banks, what are some other ways to find money to buy real estate besides the monthly tax shift? So that's kind of that one of those things. Is there other ways that we can find money on this?
You want that one, sir?
Well, you know that better than I do. I can just tell people that when they're working for a company and they're putting their monies away in their 401k, that money is not being taxed. Okay, so let me say that. So here's money that's coming out of your paycheck which means that money is not going into your pocket and it's being put away for investing for a later time. Okay, so let me explain the difference between a watermelon seed and an apple seed. A watermelon seed will produce fruit in 100 days. An apple seed will produce fruit in 7 years. Now that's totally up to you. Whatever you're comfortable with, that's the decision you have to make. What kind of investor am I? Am I a watermelon investor looking for a return in 100 days, or am I an apple seed investor looking for a return in 7 years? That question only you can answer.
That's an excellent analogy and an excellent way to put it. And to just kind of add on to that, let's say in your 401k, because you can invest by using credit cards, you can invest by using savings, you can invest by using other people's money. You might have private partners, private people that want to invest and get an interest rate on their investment. We've used all of these things to buy real estate. But let's just focus on the 401k, because that is anyone who works in a for an employer that is a corporation, most people have some type of access to a 401k. So let's just say you had been on your job for a while and you had done well in the stock market with your 401k, and let's say you've got $100,000 that's in your 401k. I don't know if you're aware of this, but you can go in and take a loan of up to 50% of that without penalty. We're not talking about getting into any trouble with the IRS or having to pay fees that are related to the IRS. So let's say you took a $50,000 loan. The cool part about it is you can invest that $50,000 in real estate and leverage it, and then start to pay back your loan out of your tax shift. So let's say you're getting an extra $200 every 2 weeks in your tax shift, and your payment back for that $50,000 is, let's say, $400 a month. Now you're using your tax shift by virtue of being a real estate investor of $400 to pay back the $50,000, and the $50,000 is going to work for you. And we're in the business of doubling money, like what my partner said here. We're doubling money in 3, 4, 5, 6 years. We're not doubling money in your entire lifetime. If you put your money in a bank at 1% interest, it's going to take you 72 years to double it. That's a lifetime.
Yeah, that is definitely a lifetime.
Yeah.
Alrighty, so now kind of moving forward. So, gentlemen, I want to thank you guys very much so with the questions that the answers to the questions that you kind of brought forward. It definitely, invokes a lot of discussion, some thoughts. And it certainly is one of those things, well, now that we have 2021 on the horizon, now's a good time to kind of start making some potential thought process of moves. And one of the biggest things that, Ursula at Laveniir can do is certainly help with strategically making those specific moves and exactly to get yourself set up for what's to come, especially in 2021. Now that we're at the beginning of 2021, this is something certainly from that. And so with also that segue with 2021 fast approaching, let's go ahead and go into our actual Laveniir commercial. Fresh off the press, I just got this. So without further ado, let's go ahead and show our Laveniir commercial. Alrighty, so one of the things that I saw in our commercial, Miss Ursula, and this is something that I was curious about. Oh, it's supposed to go again. And so the one question I have before we go ahead and turn it over to the audience questions is, tell me a little bit about the W-4. Wasn't there some adjustments and changes that happened with the W-4? Yep, you're on mute, Miss Ursula.
I totally forgot. Yes, we have to talk about the W-4 just to actually emphasize how the W-4 has changed, right? It used to be a certain way, much easier, and then very, I will not say easy, but manageable in terms of changes in terms of how to fill it out. But this year with the changes, it's totally different, and the taxpayer need to know that. And I will like to actually go into that with Dr. Ed and Andre to explain how we can link it with owning a business if you are an employee and at the same time also self-employed. So Ed, I would like you to add your 2 cents to that, and then Andre as well.
Well, so give me some direction as to what ask me a question.
Yes, the W-2, the not the W-2, the W-4 is different than the way it used to be, correct?
Right, yeah.
So how can today people actually use a business to actually complete the W-4, or find an easy way around if you find your way to be a business owner and at the same time also an employee? Andre can also dive into.
Yeah, I'm going to give it a short answer, and then I'll let Andre kind of address it on a larger scale. The only thing that I'll say is, much like putting yourself in a position of having a side business, and you're doing it, going through the steps that your tax advisor recommends you do, it qualifies you to deduct certain expenses that you wouldn't normally be able to deduct. Okay, and those are related to expenses that it takes to run the business. Likewise, when you're investing in real estate, deductions are made available through what you're spending and investing in real estate that you can actually use as deductions. The W-4 in the past was centered around changing the number of allowances that you claimed based on anticipated tax credits. So you might have 2 or 3 dependents in your family. It might be a husband and a wife and a child, which would be 3, right? But because of the anticipated tax deductions of having a side business, then you might claim 7 on your W-4, 7 allowances, not 7 dependents. We really had to always educate people about the difference between allowances and dependents. That tax form is no longer set up that way, and I'll allude to my partner,
Andre.
Yeah, Andre, for more on that.
We can't wait.
Okay, great. So the W-4 form, and I'm not trying to create some kind of conspiracy theory conversation, but a W-4 form is the form that when you are an employee and you're working for another company, and along with the W-4, you have what's called a W-2, which you receive at the end of the year on an annual basis. So the W-4 form says, I will agree to have this company to take money out of my check and go towards taxes, and I will base it on the following number of allowances, which a lot of people know this word as being dependents. So if you had 9 allowances, between 0 and 9 allowances, the IRS had no problem with you. If you went over 9, you were likely to be audited. So the IRS now wants a little more control over people who are in business. So in a way, it's a kind of a good thing, because being in business is not accidental. A tax strategy is not accidental. You can't just go to any company and just set up a business with a tax preparing company. It doesn't work like that. You need some people who have an understanding of the full scope of what it takes to be in business. For example, a lot of people who are in business don't have a tax ID number, and their tax preparer should tell them, when you get a tax ID number, that sets you up, as far as the IRS is concerned, for you to be a strong, legitimate business. That also sets you up for a lot of other things that's out there other than the IRS. So the W-4 form was used to adjust the amount of money that was taken out of your check, and you had control over that. So if you told them, I'm a single person, I don't have any children, so I'm claiming 1, then they have a tax chart that says, okay, 1 person, 1 dependent, this is how much money they're going to take out of your check. And so you had some control over that. Today, you still have control over it, but it's a little more complicated, because it's not about dependence anymore. It's about your family status. Are you married? Do you have children? Are you divorced? That type of status. Now they have a chart based on your status. Now, a lot of other people are running into situations where they have no taxes taken out of their check. I will say this very clearly. If you do not have taxes being taken out of your check, be sure to find a company like Laveniir to go to, because these other companies don't care about the fact that you do not pay taxes. They're just number people, and they're just going to do your tax return based on the numbers. Laveniir, on the other hand, is a company that gives you strategies with your circumstances and situation, because there's a lot of people don't understand that even though you're not paying taxes, you can actually get tax deductions that are better than what is called a W-2 form person, or what they call a non-statutory employee. So there's so many advantages that you can use the W-4, but you need advice, because it's not accidental. It has to be done on purpose. The last thing I want to say is, okay, so the last thing I want to say is that most people who are doing their taxes and don't have a plan to have a side business, you will have a lot of struggles. I don't care if you're making $100,000 a year. If that's your only income, that's your only means of income, you are putting yourself in a very dangerous position because of the way the economy is changing. There's going to be a lot more opportunities, and while that might sound good, it's going to be a lot of pressure on being successful. And then you need to start today to know what you really want to do, because like I said, these things are not accidental. You have to take the time and invest in yourself and in your growth in order to make things happen in your life. And that's what I have to say.
And I think that couldn't have been said any better. And I think that the big thing is, the takeaway especially for our guests, is, especially with the W-4, feel free to reach out to laveniir.com, reach out to Ursula. They'll be able to help you navigate through those waters. Now we're going to go ahead and turn it over to our guests. Is there anybody that has any questions that you'd want to have answered?
I have one. How would I get in contact with Dr. Whittle and Apostle Aries to discuss some things with real estate?
Info.
So,
Dr.
yeah, I'm more than happy to give you my phone number.
In the chat.
Yeah, I don't mind giving my phone number out, as well as my email.
Okay.
And I don't know what Andre Harris would do, but that's what I'll do.
Okay.
Is that okay, Yusuli, for me to make that available?
Oh, yes. I was actually advising you to put it through the chat so he can actually grab it. But you can air it too.
That's too technologically advanced for me. I'd rather just say it over the. All right. So my phone number is 813-966-5977. 813-966-5977.
Perfect. Thank you.
All right. My email is info-tampa. That's N as in Nancy, F as in Frank, O as in Oscar, and Tampa, like the city Tampa. That's all one word. info-tampa@hotmail.com.
Great question. Great question.
Perfect. Thank you.
Thank you.
Is there anybody else that has any additional questions?
Can we ask the guest a question?
Oh, actually,
yes,
there was a question that came through. There's a question that came through chat, and that question is, for tax purposes, are there certain items businesses should have in the name of the business versus personal property?
That's an excellent question. I would have to say it all depends on where you are currently. If you have more than one piece of property, and then what type of property you have. There's a strategy for that, because when it comes down to real estate, initially I would say it would be a business expense all the way. I would never put anything personal in my portfolio personally and separate it from my business initially. But there are other circumstances, and depending on your circumstance, we can answer that best. But off the top, generally, if you're sitting with one piece of property, then yeah, definitely you want to put that in your business.
Great question. Great question. Alrighty, if there's, let's see if there's any additional questions. If not, the great thing about it is, and this is where we'll kind of segue, you can always go to visit the website, laveniir.com. You can go ahead and click request to contact. And the great thing about that is you will certainly be able to connect with Ursula, and she will also have Dr. Ed and also Andre's information, especially if there's any questions that you may have regarding real estate. But we definitely want to thank everybody tonight. Sorry that we went about 2 minutes over, but as you can tell, there's a lot of really solid information that is coming from this. And so without further ado, we want to go ahead and say thank everybody for, attending tonight. And we look forward to making sure that, we can help assist every step of the way. And don't forget, once again, laveniir.com. And thanks everybody for joining, and everybody have a great night tonight. Thank you.
Thanks, Jane.
Thank you.
Thanks,
Happy
everybody.
New Year.
Bye.
Bye-bye.
Bye now.